Greetings, this is Kevin Jefferson, father of the Forex fam and followmytrades.com, here with a follow-up to trade theory for January 21st, 2022. So I'm going to start with Bitcoin because Bitcoin has continued to fall and will likely be the topic of conversation today. So in the previous video, I mentioned that, price was up in this area when we spoke about it. So it's only been a couple days. I think I sent an analysis out on the 19th, I believe, or a couple of days ago. But nevertheless, I mentioned price falling down to the 38,464 level, which has already pierced that level and pulled back off of that. I wouldn't be surprised if price does pull back up into the 41,000 area before deciding if it wants to continue lower. But price has continued to drop as we expected to. And like I said, I don't expect it to continue all the way down. It will probably retrace a little bit before possibly continuing lower or consolidating and making a reversal for a period of time. So I hope that this has been beneficial for you. I wanted to do something a little bit different today. And first I'm going to stay mostly on Bitcoin. And then I wanted to talk about what the value of this analysis would be in dollars. So before I do that, let me go ahead and get actually gold out of the way because I don't want to jump around. So gold is continuing higher. It's pulled back off of a move upwards. We're looking on the daily chart. It's actually, you can see it's pulling back off of a move upwards, but prices continue to move higher as I had mentioned a couple of days ago. So I'm still eyeing the 1950 level for gold, but gold is really having a serious time trying to get higher. It's channeling, and it is increasing in value a little bit, but it's not moving as quickly as one might expect. So now back to Bitcoin. So Bitcoin is pulled back off the fresh low of the 34,000. I'm sorry, the 38,000 level. So I wanted to actually speak to back in November, I believe, of 2021, around the first or second week of November. I mentioned the pullback off of this high up into this. It was going, price was moving up towards the 70,000 area. And this big green line here, which has been on my chart the whole time that I've been giving this trade analysis so that you could have a reference point for what I'm talking about. This green line was where price, I said price would come back to and possibly start to show weakness. And price did show weakness there back in November, and then price continued lower. So the value of that, when I did the calculations, the difference between where I gave the first entry lower and where we would have gotten out of the trade if it turned around on us. The risk of that trade, just to keep it simple, let's say we would have risked $4,185.28. So that's $1 per unit of growth or loss, or $1 per unit of movement is what that's based on. So $4,185.28 is what would have been the risk to take this trade right here. And then if we would have just continued to short it or sell it, as we call it, sell it expecting price to drop, over the last couple of months, prices continue to drop. I've continued to give you new entry points along the way. But let's just say you jumped into the sell trade when I gave it out, or when I mentioned that there could be a sale back in November, and you just continue to allow it to fall out, even to where price is right now. The value of taking that opportunity would have been for $41.85.28. So $4,185.28 in risk. You would have received to the moment $26,316.22. So that's a great risk reward ratio. Actually, it's like a 1 to 6, actually a little bit more than a 1 to 6 risk reward ratio. And so this trade would have put you in position to have earned over $25,000 over the last couple of months. And the thing I want to also mention about this is a lot of people are always really confused when I talk about selling or shorting an asset. So all shorting is basically, it's a fancy word for when you're selling something expecting price to drop, as opposed to when people say, you know, I'm buying something, I'm going long something, I'm buying it and expecting price to go up. You can actually sell something and then catch it on the other side and buy it back at a lower price, and you can make the difference in price. So that's called shorting. And so if you was shorted Bitcoin back when I mentioned it in November and gave the indication of when the price was weakening, that would have put you in position to yield over $26,000 to date. And now Bitcoin isn't done moving, so there could be more downside. As I mentioned, there's another target for me of 33,743.83. So now that this first target has been hit that I mentioned earlier in the week, I'm curious to see if it's going to make it as far as low as this. If it does, we'll come back and analyze it, and that puts into play the lower levels that I mentioned way back when I was talking about price getting down into the low 5 digits. But we'll get there. We'll deal with that when we get there. We've got a lot of ways to go before we get into that point. So I just wanted to share that with you. That's the value of the advice that can come as a result of knowing proper analysis of the charts, understanding how the markets are working, understanding supply and demand, and then making a bet in accordance with your thoughts. That's what that could have yielded you. So to learn how to do this for yourself, or to have someone help you with this, called DFY cash flow building, where we actually plug you into our system and help you build cash on cash flow for yourself, for your business, so that you don't have to work as hard to make the money that you want to make. Join us at fmtrades.com so we can help you out. And until next time, I hope you have a wonderful day and happy trading.